back to the Big Skinny with me, Lou Basenese. I've been bouncing around this world like a kangaroo, going from Nicaragua back to New York, and I'm headed out of town again tonight. But we thank you for joining us this evening from our studios in Brooklyn. If this is your first time, well, you're in for a treat. We're going to be talking all about the shutdown scaries, bubble trouble brewing in the stock market, and if we shouldn't be worried about a bubble, what in the world should we be focusing on when we're looking at investments? If you've not joined us before, look, people call us the Sports Center of Financial News. We cut right to the chase. It's all filling and zero fluff. And guess what? We also involve you in this adventure. So if you're joining us on one of the live streaming platforms, X, LinkedIn, YouTube, wherever it may be, join the conversation and change the direction of the conversation if you dare. There's no comments that are out of bounds, but just if you're going to dish out the trash talk, be ready to get it back. If you got questions, stocks you want us to take a look at during the show, please don't be afraid to chime in. I'm excited for this week's episode being back in the United States. Yeah, we found this memorabilia in the studio. I'm bullish on America, baby. It's always good to be back home. We'll talk about why, and we're going to have two special guests because one of the key things we believe here in the Big Skinny is that we got to be humble in the markets, or we're going to be humbled by the markets because we know what we don't know. And that's why we always bring on experts to educate us, to give us an edge in areas that we just don't naturally have them. And tonight, on tonight's episode, I'm excited to bring in a technical analyst. That's not an area that I focus on a ton, but Tammy Marshall, the Fibonacci princess, is going to step us through what she looks at in some of these top tech names that have been trading off the charts this year and whether it's a good time to enter them, to fade them and take some profits. I'm really looking forward to this segment and this interview with her. At the same time, I'm bringing in a fellow fundamental analyst, Sam Badawi, Sam Solid 57 on X, if you follow him. I encourage you both to follow both guests that we have joining us. And Sam's going to walk through some of the same names that Tammy is in terms of Tesla and Palantir. And then we're also going to talk some of the new technology names that are leading this charge that Sam is interested in that we've spoken with before. So again, get ready because you know how we start this off. Every show, we focus on the three headlines that really are kind of causing head scratchers and ways that we should be trading them so you don't get caught in the confusion and lost in the market madness. That's what the Big Skinny is all about, giving you the essential information that matters to increase your bottom line. So with that being said, let's get to this week's rundown. Coming out throwing punches this week with this week's rundown because everyone's got not the Sunday scaries, the shutdown scaries, acting as if we've never been through a government shutdown. Would you please? There's been 21 of them based on my count. There was one that was only a day long. Some people leave that one off the list. So whether it's 20 or 21, doesn't really matter. The outcome and some of the outrage is all the same, right? So you see headlines now coming from Market Watch saying that the absolute last thing we want is a stock market that has to deal with a shutdown. Here's why. Here's why you shouldn't read this article, because it doesn't matter. The data is what really matters. But let's indulge for a second here from Kevin Gordon and his thoughts on why a shutdown could be tongue-tied, catastrophic for me. I'm still jet lagged, yeah, but it happens. He says, this one shutdown could come at a really unfortunate time because we're supposed to get the jobs report on Friday. You know, that beloved data that's completely unreliable, what the Fed's been relying on to determine the future direction of interest rates. Yeah, woe is me if the government shuts down, the BLS, the Bureau of Labor Statistics, won't be able to put out their data at the end of the week. Guess what? The Fed flying blind is probably not a bad thing, folks. They've been flying blind anyway with bad data and anticipating tariffs that never had an impact on inflation. So let's really get to it. What matters? Stock market shutdowns, government shutdowns. There's a high probability of it. This is the latest from Polymarket last night at 68%. I checked before we came on. It was up to 79%, and right now it's at 84%, all the way back up. So I can tell you, when the clock strikes midnight tomorrow night, the government's most likely shutting down. But what does that mean for the stock market? Well, in this week's first money chart, the stock market doesn't really care. I mean, if you look at the impact of government shutdowns, which historically can last for as little as 1 day and as long as 35 days under President Trump's first term in office. You see, as we go out during the shutdown, yeah, stocks are down a little bit. The min and max here and the average is in the middle, right? So the average is about basically trading flat. But then we get 1 month, 3 months, 6 months, 12 months out. Decidedly, we're in positive territory for the stock market. And not just some of the time. If you look 12 months out from every government shutdown, stocks have been higher 85% of the time. As much as 36% higher, and on average about 12%. Worst case scenario is we get a little mini correction, a 7% decline, which I don't think that's going to happen. So what's the investment takeaway here? Don't be afraid of the government shutdown. Buy the dip if there is one, because historically it's proven to be a great buying opportunity. And we're going to talk about later on why I think that's the case based upon the fundamentals. And maybe Tammy will give us some insights on the technicals heading into the shutdown. So forget about the government shutdown. Shutdown, shmutdown, it doesn't really matter. Well, what does matter? Should we be worried about a bubble? Are we in fear of another dot-com collapse? Well, if you read the headlines, you're going to keep seeing more and more of these things that are warning. We've been here before. It's going to end nasty. We lived through the dot-com bubble. There's a lot of similarities. No, there's not. But let's indulge the financial media, the mainstream media telling you that we should be afraid of this bubble, and Wall Street here coming from Barron's that Wall Street's fearing a market bubble and how to trade one. Well, let me tell you how to trade one. Don't try and trade a bubble. It's impossible to trade a bubble. You have to have a plan before the bubble bursts to lock in your profits. You have to have trailing stops, or at least take profits on the way up so that you're not caught trying to buy a falling knife. So you don't trade around a bubble. But why would these market professionals be advising this? Well, because everyone wants to look smart. Everyone wants to look like they called the top and the bottom. This includes our Fed Chairman, Jerome Powell, who in his most recent statement said that by many measures, equity prices are fairly highly valued. Mainstream media jumped all over this, making it akin to the utterances from good old Fed Chairman Alan Greenspan, who dubbed the term irrational exuberance during the dot-com days. But here's the key takeaway. Now, I'm not going to claim this is my own. I'm taking it right here from Sachin Sharma, who said, here's what's going to happen. There's a lot of charts out there that are going to be showing overvalued equities by all different measures. And you got to make a choice in this market. You're either going to spend your next 6 months shouting that the markets are overvalued and sitting on the sidelines, or you're going to make a lot of money. You got to make a choice. Would you rather be maybe right about the timing of a market top, or would you rather have a lot more money in your trading account? I don't know about you, but I'm going for the latter because, look, stock markets can run a lot higher and farther than many people anticipate, even when they start to look toppy. Now, again, I told you there'll be plenty of these charts that are coming out. This shows the comparisons of various valuation metrics through market tops. You see the 1929, 1996, 1999 peaks in all these valuation ratios that led to market declines. Is 2025 next? Nope, we've shared it on previous shows that there's a lot more room for this bull market to run. So don't worry about the bubble trouble. Worry about where you're going to find profits opportunities in this market. And we're going to share multiple ones with you today with our guests, and then also follow up on some names that had a dip since our last show that could be great entry points for those of you that maybe have been afraid to jump into the markets. Look, I can tell you this, scared money doesn't make money. If you don't make an investment, you're never going to grow your wealth. So we're going to focus on those opportunities that allow you to do that. So no bubble trouble. If we're not worried about that, then what should we be worried about? Well, that great James Carville quote, the political democratic strategist, it's the economy, stupid? No, the economy is not something we have to worry about right now. It's rip-roaring. The latest GDP print was much higher than expected, approaching 4%. So what is it that we have to worry about? Well, it's earnings, right? That's what ultimately drives stock prices. And here's the funny thing, as much as these Wall Street analysts are out saying that the market's looking toppy, if you look at their estimates from the bottom up for their price targets for individual companies, and then add that up to what that means, the earnings estimates and the price targets for the S&P 500, well, FactSet lays it bare here. It means the stock market should go up another 11% this year. Now, why is that? Well, look at the earnings growth. We've always said this here. As earnings go, so goes the market. All you got to do is follow the trend here. This blue bars show increasing earnings actual and estimated for the S&P 500, which sets the stage for the market to go higher. Now, the naysayers here will try and tell me that, Lou, eventually these earnings are going to slow down, that these earnings are estimates towards on the far right here. This can't possibly keep up. Well, I'm here to tell you, don't bet against the trend. If you look at the money chart in terms of earnings and look what's been driving the market since this bull market began in 2020, homie, don't play that. This isn't multiple expansion like everyone's talking about. It's actually earnings growth. If you look at the far right here, 76% of the move in the S&P 500 can be attributed to earnings growth. Only 30% to multiple growth, how much people are paying for that. So the price to earnings multiple, that really doesn't matter that much when it comes to it here. It's really not that relevant. I want you to focus on earnings growth and companies that continue to grow earnings aggressively. That's the bottom line for what matters most. So with that being said, that's this week's rundown, what you should be paying attention to, earnings growth, and what you should be ignoring. Wall Street analysts predicting a top and a government shutdown. And with that being said, we're going to take a brief break before we bring in our first guest.
Wow, Elon Musk took the paddles out this morning. Shares of the EV company jumping after Elon bought 2.5 million shares for $1 billion. This is the first time Musk has purchased the stock in the open market since 2020. It's reportedly his largest purchase ever. And let me get this right this time. Tesla's up $23, almost 24. It's about a 6% move today on that cash infusion.
So what do you think he's saying, Lou?
Well, listen, Peter Lynch said it early. Insiders sell for a lot of reasons. They buy for only one. They think the price is going up. He's betting on himself. He's betting on the future of humanoid robots, on electrification, on storage. I've been a Tesla, let's say, pessimist because of valuation alone. I don't want to bet against Elon, though.
He's got
I'm not a bear.
To spare, though. I would just argue, is he doing this? Does he really believe it? Or is he doing it because he feels like the market needs to believe it?
Well, I mean, he could do that with, $500 million. $1 billion is a testament and a statement, loud and clear. We're headed higher from here. Market's starting to respond in that direction. Welcome back to The Big Skinny with me, Lou Basenese. Good to be here with you on this wonderful Monday, and it's even better to have a guest with me, Tammy Marshall, the Fibonacci Princess. Want to welcome you to the show for your first time. Tammy, glad to have you with us.
Thank you so much for having me, Lou. It's my pleasure to be here.
Well, first things first, I saw a tweet, and I'm sorry, I don't know if you call it an X, a post. It's a tweet to me. It's always going to be Twitter, right?
Right,
when you were thanking, I believe it was your dad, who was a retired U.S. Air Force pilot, and thanking him for his service. So I want to extend a thank you. I know I said I'm bullish on America earlier in the show, but I want to thank you and your father for his service as well. So please pass those.
Well, thank you so much. I always have a 4th of July all over the house, and people are like, why do you always have American flags up everywhere, like floor mats, everything? And I'm like, it's always patriotic at my house. I'm very, very proud daughter of a U.S. Air Force pilot. So, and my grandfather was a ball turret gunner in World War II also. So.
Wow, that is awesome. That's a great legacy, and we're very thankful for their service. Now listen, I gotta be honest, I always do this when I come on the show. I'm not a technicals first guy. I grew up classically trained, fundamentals. So when I had an opportunity to talk with you about joining the show, I'm really excited to see what you look at in the markets and how you would describe to new investors what you do, right? So you're looking at Fibonacci patterns for price and time to figure out good entry points, good exit points. So how would you describe that to people, how you look at trading? And then we'll bring up some charts to really drive it home with examples.
Okay, so what I like to say is I do think that you need a healthy dose of both, right? I mean, you want to look at the technicals, but you also want to be aware of what's going on fundamentally with companies also. And what I look at is previous swings in the market, and a lot of people think, oh, Fibonacci, not a big deal. You just draw a couple of points here and there. But I'm actually the protege of Carolyn Borodin, the Fibonacci queen, who's been doing this for over 40 years. A lot of people know who she is. That's how I became the Fibonacci princess. And I started learning how to trade around 2008, 2009, and my husband was a huge fundamentals guy.
Okay, so you had that experience of watching your husband and learning from him on the fundamental side, and then what drew you to the technicals? How did you say, I just want to be different than my husband?
No, it wasn't that. It was that I met Carolyn in the Grand Caymans in 2011, and she said that she was looking for someone to mentor. And I ended up being that person because she showed me what she did, and I've always been into patterns and pattern recognition. I'm kind of a big numbers dork. And when she showed me how you could find support and resistance and be able to define risk by doing the technical analysis, that was when it started to click for me with trading, because, the fundamentals, I'm like, oh my goodness, that's, there's just a lot. There's a lot there with the technicals. I'm able to draw the lines. I'm able to look at these zones, and I'm able to define my risk by placing my stop underneath the zones or above the zones, of course, if it's a bearish position. Right. I'm also able to tell if something's extended, I'm not interested in getting in. So a lot of people do like to trade on momentum, and they think if something's extended, it's the right time for them to jump in. That's just not the way that I trade. If something's extended, I want to look for a pullback in order to be able to define my risk to continue to move up.
Okay, so let's pull up a chart. Let's pull up, you sent some charts in because I know I can't draw the zones in here, but I wanted you to do it. So let's pull up Tesla and use that as an example, because I think help people understand. You look first at these zones, the support and resistance levels, before you even think about the fundamentals. Is that how you typically would start with
Absolutely. Absolutely. But of course, I want to know if with Tesla, it's missed earnings twice out of the last 3 earnings. So we are coming into earnings for Tesla. It's October 22nd. So we do want to be aware of that when we're making trades, because what I do say when it comes to earnings is that earnings are a gamble, either way, really. So if you want to use my work coming into earnings to have a run into earnings, that's great, but I don't recommend sitting through earnings. But this is a great example of a recent setup that I gave my clients. We had gone through some resistance that I saw on a weekly chart, which that one I gave you also, but right now we're looking at my daily chart, and I was looking for us to continue to move up. So I did have a support 417 to 19, which included a symmetry as the red line, which is a previous swing that happened in the market. And then there's an extension to the downside along with a 786 retracement, which was a nice cluster of support in order for the clients to define their risk. And now what you do see is us coming up to those targets. Those are the green extension targets. And what I say is mini moves tend to terminate at extensions of prior swings. So now what are we seeing after we almost got to that first target on Tesla? We are seeing a little pullback here.
Okay. So for people looking at this first time, again, I want to make sure, because I came fundamentals first and then technicals, right? So I learned the other way, that let's evaluate the company, and then now I decided fundamentally it's a great opportunity, but now let's try and time my purchase a bit more wisely by looking at support and resistance. So what you're showing here is really there's defined support and resistance levels based upon previous trading patterns. And then because of that and where the latest price action is, you can define where next level kind of price target and extensions can go. And then how do you manage that? If, let's say on this Tesla chart, it hits target 1, are you taking a certain amount of your trade off and leaving the rest on for target 2? Or how do you trade around the different targets as the trade's working out for you?
Okay, so now we're showing the Tesla weekly chart, and that, even though we're getting extended on the daily, we still have a lot of room to run on the weekly. The weekly targets are 563 and 658, and that's why I wanted us to be able to look at both of these time frames. I not only look at intraday time frames, which are minute time frames, but I look at dailies, weeklies, and monthlies in order for me to be able to see, we may be extended on the daily, but if I get a pullback on a daily, look at this weekly. We still have a lot of room to run on the weekly. So for me, Tesla still has a great opportunity to keep this run up. And, next, what I would be looking for is another nice pullback on the daily to continue this move up to those larger swing targets of 563 and 658.
Okay, so now you see that a little bit of a pullback. You still got weekly, the targets are further out. A lot of upside potential. What point do you look at fundamentals? I mean, where do you fit that into how you look at it?
Well, to be honest with you, I really don't. I mean, I consider, earnings and maybe things that are going on with the company here and there, but I really just place my stops with my technical analysis, and that's what I go by.
All right.
because
so you are
because we have
so
too much noise. We have so much noise going on all the time.
I would
And to me,
agree.
it helps me to keep that noise out is to be able to just look and say, okay, it's starting to dip below the 50 simple moving average. So on my charts, what you see is the 5 is the blue, that's the EMA. The red is the 13 EMA. The green line is the 50 simple moving average, and the pink
Okay.
dotted line is the 200 simple moving average. So as long as I have all the moving averages on the side of the bulls on a chart, that's what I'm looking to continue to get bullish on something.
Okay, so you are building in a discipline of when to exit based upon the targets. You're not worrying about fundamentals, which I would tell you gets most fundamental investors in trouble because they fall in love with a stock like their sweetheart and the price goes against them and they say, I'm going to move on. No, absolutely not. They say, I'm going to buy more, and which just compounds the problems many times,
Yes.
right? So you're
Yes.
avoiding that.
Yes, absolutely.
So let me go about it from another way. Again, I'm fascinated by this because I trade in completely and invest in completely the opposite way. So how do you wake up in the morning? Like tomorrow morning, you're going to go, listen, we're likely to have a government shutdown. You've got some new money to deploy because one of your trades you exited. Where do you start to find a new investment? You've got 4,000 plus choices. How do you determine? Are you running screens to see certain companies that might be in the zones that the setups?
Absolutely.
How do you like? What's your filter to get down to a universe of opportunities to consider?
Well, I run so many charts, hundreds of charts. So I don't just look at I look at the indices, I look at stocks, I look at bonds, I look at currencies, I look at crypto. I look at commodities. I'm looking at all these different things. And a lot of times when I look at so many different stocks, I am looking for those honey badger stocks out there when things may seem a little bit dicey. Now, all year long, though, hasn't it seemed dicey? That's the
Yes.
problem. People keep going, don't buy the top, don't buy the top. Don't. I'm like, well, you know what? I'm going to remain bullish until I'm not, and
Yeah.
I did sound like a broken record a lot this year. I kept saying we're extended on SPX, we're on extended on NASDAQ cash. We could see a pullback here, and as soon as we get that pullback, what happens? We keep going again. So right now, I'm bullish until I have a reason not to be. Now, is it also nice to look at some of those honey badger stocks that may not be as affected by the market, or with the interest rates coming down on houses, we could see a boom in some of the housing stocks and builders coming out again and everything else. So there's just a lot of different things you want to look at.
So you have a very fundamental mindset, though. So you're looking at going, hey, price is a little extended. Let's look for pockets fundamentally that might be opportunity. So housing.
Absolutely.
What do you think? I mean, you mentioned crypto, so I got to go there, right? So Bitcoin,
Right.
There's a cacophony of voices on all sides on Bitcoin. It's going higher. This is just a seasonal pullback. We're ready for the next rally. What do you see from the technicals around Bitcoin?
Okay, so what you're looking at on my chart here is those light gray lines that are going up and down, that are going vertically there on the chart. They are actually lines where I had timing for a low along with that price support on September 25th that we recently bounced from. So we did have a nice bounce there, but as you can see up ahead, we do have a resistance around anywhere from this 114,000 area to the 116,000 area. Now, I will also say this, and I didn't give you my Bitcoin monthly chart, but if you look at it like at a
You
monthly
held
chart,
back on us, Tammy.
I know I should have given it to you.
That was the money chart, wasn't it?
The Bitcoin monthly chart, it would make sense with the dips we've had in the past that we could get around 80, 90,000 on Bitcoin also. So right now, I think we're really stuck between decisions here. What I don't like about Bitcoin daily, as you can see by looking on my chart, you see that green line, that's the 50 SMA. It's correlating with this pink 618, which is correlating with this cluster of resistance that I'm talking about, 114 to 116. So, and that 5 has slipped below that red 13. So 3 of the moving averages are now on the side of the bears on Bitcoin. It doesn't look as good to me. So,
you're holding out. Do you have a current position in Bitcoin right now?
I own Bitcoin from a very long time ago. And so I don't actively trade it. I'm actually on Wolf Financial Crypto podcast on Tuesday mornings at 11 a.m. And I do talk to them about what I see, but I'm not really an active trader of Bitcoin. I own quite a bit of Bitcoin and Ethereum, but what I say is I've got 2 young daughters that are 6 and 12, and those are kind of their I'm kind of holding on to that for them.
That's the beauty of being early and right, is that you have such a low cost basis. You go, whatever, forget what the charts say. I've had this long.
I don't care if it goes back to 80. I'll pick up more.
That's how I am with Apple. I'm on a cost adjusted basis, split adjusted of like $41 a share. So it's overpriced right now, but it doesn't matter. Let me ask you this.
I've had Palantir since 17. So.
Oh, well, you beat me there then. That's even way better. So let me ask you this. Someone completely new to investing or new to technical trading, how would they get started? Do you have a course? Do you have books that you would recommend? I mean, this just, for me as an outsider that's been in the markets for a long time as an insider, but an outsider as a technician, I wouldn't even know where to start. I mean, how do you start looking at technical analysis to guide you? And then second part to that question is, what's been your success rate? I mean, please do not be afraid to brag, because I think it's important to know when people do well. It helps underscore why they should put time and attention into studying these types of trading strategies.
Well, I'm up 38% for the year, and I'm up 54% overall in my accounts. And I actually have a Blossom account, so I have actually posted that on X. It's just a fact. It's not blowing smoke. And listen, here's the thing. My husband's been doing this for over 37 years. So the thing that does bother me a lot is all of the smoke blowers out there, and I have to wonder if some of them are just showing their paper account results, because trading is, I say, besides parenting, trading is the most humbling thing you'll ever do in your life. It's just when you think you have it figured out, the market turns and you've got to pivot, right? That's just the way it is. So that is what I love about my technical analysis. It does help to keep me on the right side of things. I am building up my YouTube channel. It's Tammy Marshall, Fibonacci Princess, and sharing videos on there, trying to explain to people. Before I did this, I taught children with autism for 15 years.
Oh,
so
wow.
I'm a pretty good teacher. I'm trying to make simple videos out there. I am writing a very simple Fibonacci book right now. And I don't know if you know who Danielle Shea is. She's on TV quite a bit. She's one of my best friends, and she is writing a book for kids right now. And she and I are actually looking into doing some things together, because the work does not need to be too confusing. I understand if people look at the charts, it looks confusing, but what I try to encourage people to do is ask me questions. Come on X. I'm at Trader Tammy1. Come on at X, ask me questions. I'm more than happy. There are no dumb questions. I'm more than happy to explain to people and take time with them. I love what I do. I feel very blessed to be where I am right now. And I'm very, very grateful and thankful to be able to guide people and help them, because it is.
Well, that's very generous.
It's difficult but rewarding. It's difficult but rewarding.
you put your finger on it. There's a world of pretenders out there, right? And can be easy to mislead and but not be so generous with educating. So 2 things before I let you go. One is, when you finish the book, let us know. We'd love to have you back on to promote it and get it in people's hands.
Thank you.
Would love to get a copy myself so I can start incorporating this. And then 2, as you look, you sent probably 7 or 8 different charts. What's right now one of your most compelling setups that you see in the market? Something that we can leave listeners with that might be something where they can get their feet wet and looking at charts and Fibonacci patterns and targets to maybe place a trade around.
Well, I think you have the chart for Palantir, which I actually do like Palantir right now, because the only problem is it is failing off my resistance at 181, but I do like that anywhere from maybe about 165 to 74 zone, because that would include that 50 simple moving average, and it's got a little ways to run to 202 or 219. I know that y'all are pretty big on IREN, and it's got a ways to run up to that 52, 55 area. It's got all the moving averages on the side of the bulls.
I love hearing that.
I like it right around that 44, 45 area also. And I know that y'all had asked about CIFR also, and CIFR is a lower price stock. They're doing great things. It was just on Charles Payne recently also, which, I love Charles Payne. I just have to say that. And
no, he's a good man. We're on Fox Biz Big Money Show across from each other a bunch talking about these names.
Well, yeah, and he had me on a while back, and then they just contacted me again recently to have me on. So we'll be at the Money Show together in Orlando, October 16th or 15th to 17th, coming up soon. But that 9 to 11 would be your setup on that chart on CIFR.
Okay.
And that is a nice cluster of support from previous swings that have happened, and it's going to run all the way up to $16 or $18, but you could just hold on to it. That's what I've done with Rocket Lab. I've owned Rocket Lab since it was $5 stock, and I've added to the position on the way up. But what I like to do is I just like to look at that, level of support and that risk, so that I can say, hey, if it goes through this, something awkward is happening. I no longer have swings that have previously happened in the market, and it's got me worried. So guess what? I'm going to stay on the sidelines until I can see something better, because I would rather take a trade off and have money available for new trades that I see setting up correctly than to have money in a stock that just continues to roll over.
Yeah, no, that's great advice. Always having some cash on the sidelines. Look, music to my ears hearing you say that CIFR could go a lot higher. IREN as well. I've got those have become two larger positions in my portfolio on this as this AI energy trade works itself through the markets. But listen, Tammy, I want to thank you for your time and your willingness just to educate even seasoned market veterans like myself on an area of the market that I have literally no clue on. So look forward to having you back on, especially when you have your book. So thanks again.
Thank you so much for having me, Lou. You'll have a great rest of the day.
All right. Well, folks, this is one hallmark of what we want to do. We want to bring on people that stretch our just abilities to focus on new areas, right? Always be learning, right? Be curious, not critical. Technical trading, I confessed earlier, was something that I kind of laughed at because I was exposed to pure technicians that would say, I don't care, I don't even need the ticker, just show me the chart and the price movements and I can tell you where the stock's going. As a business person that loved building businesses, growing businesses, that just made absolutely no sense to me. How could you just look at random price movements and not pay attention to the business fundamentals? But as Tammy's laid out, there's very constructive ways to pair both technicals with fundamentals. As I've shared, I've incorporated them very simply, just simple moving averages to help guide my investments. So I encourage you, check out Tammy on X. She provides great content and educational material, and her YouTube channel. Also want to encourage you to follow us on Twitter, right? We're streaming on X. I'm sorry, I can't call it X. I just want to call it Twitter. It's always going to be Twitter for me. I'm old school, get over it. Follow us there. I mean, Elon Musk, if he knew me, he would say you should follow us there. That's what we're going for. So again, we'll be right back with the other side of the equation. But before we get there, follow us on YouTube too. Mr. Beast, if he was there, he'd follow us. We want to try and reach his levels, but I'll take a fraction of Mr. Beast's levels for providing good, educational, informative market content. Speaking of which, our next guest is going to bring us the other side of the equation. We talked about technicals. Now we're going to the fundamentals. So stay tuned right now. We're going to be right back with some additional investment opportunities from the fundamental perspective, where we can bring on more power capacity.
And is that how you find those opportunities, maybe those offshoots of AI? Not the Mag 7 players, but what are those opportunities where maybe we can get in early and we could see some of that significant rally?
Maybe some individual stocks or sectors. How
Absolutely. So I always look at, like, pick and shovel plays are a great way to play a new trend. NVIDIA was the ultimate pick and shovel play, but now you have to think of first derivatives, right? Who else is doing something that's essential? So that brings in names on the power side. I mentioned the Bitcoin miners that are pivoting to providing the compute. It brings in names like Core Scientific, which was acquired by CoreWeave. So CoreWeave's the household name in the space, but they also have a ton of leverage on their balance sheet. So maybe not so attractive from an individual investment standpoint. But in that same class, you have TeraWulf, W-U-L-F. And I own all these, so full disclaimer, because this I see as the next leg of this trend. IREN, which is another Bitcoin miner that's pivoting, and then CIFR mining. So those are three opportunities that you can play this power supply struggle, and you're seeing the likes of Alphabet and Google do deals with TeraWulf to secure power. So I think you're going to see more in those types of deals unfold as the year goes on. And that's really re-rating these stocks because they've been pinned based upon Bitcoin prices, right? How much Bitcoin can they mine? What's their hash rate?
And then you got the halvening, the rewards kind of decrease over time. So that's
exactly. So now you're changing the model, almost like we changed the model for Apple. Remember, it always traded at a lower forward multiple because it was just a hardware company. And then when services revenue breached and hit an inflection point, it jumped, and now it trades at 27, 28 times forward earnings. So you're seeing that same re-rating and applying a new valuation model to these Bitcoin miners that are pivoting to HPC. So I think that's one of the best opportunities in the market right now. I'm personally over-levered there, overexposed. So either I'm wrong and sorry, or right and happy. And I think ultimately this trend plays out favorably for that.
Welcome back to the Big Skinny with me, Lou Basenese. We're moving on from the technicals, which for many is akin to a duck-billed platypus. You don't understand what it does, what kind of animal, how that got created. Hopefully you got a better perspective thanks to Tammy Marshall. But now we're getting into my comfort zone, fundamental analysis, and deeply rooted in finding tech investments. And I'm excited to welcome a fellow tech investor, fundamental analyst, Sam Badawi. Sam Solid 57, good to have you on the show, my friend.
Thanks a lot, Lou. Nice to meet you. Nice to be on the show.
Yeah, we've been on separate spaces together, kind of exchanging different ideas back and forth. I want to congratulate you, though, because if I remember correctly, last week on X, you got to celebrate the wins. And somebody, I think, bought a new Tesla because he's been winning so much. Am I accurate
here? Yeah, you're very accurate in that one. I mean,
good for you.
It's a lot of hard work, perseverance, but you know what? I've been looking forward to getting that car my whole life.
Yeah, man, that's awesome. You got to do it. And I'm glad you had the wins to give you the comfort to go, hey, I'm making it happen today.
Yeah.
So let's talk. Like, we came across each other on a space because we looked at things very similarly. What are you looking at? Like right now, my biggest, and I'll confess this to everyone, I think they know it now over the last couple of weeks, my biggest positions are in the AI energy related space. So all the Bitcoin miners that have pivoted to HPC. So IREN, CIFR, have some clean spark. What do you think of those names? I know that I've seen you tweeting recently on IREN. So what's your whole fundamental analysis of that situation?
Yeah, so a lot of this really stems from basically the compute bottleneck that AI, as far as a build out, has been happening for a long time. I mean, first we started out with ChatGPT coming out, and the focus was really honed in on training models and training compute. But lately, what we've been seeing the last year and a half is that, okay, so you can train your models, but there's going to be a lot of people that are going to be hitting these models left and right, whether it comes from enterprise or small businesses or even consumer, even with OpenAI and Gemini. So as that starts to scale up, it's not so much the focus on building out the best possible GPUs for the training models, but it's about building the infrastructure to be able to manage all these inference queries that are really going to be growing at a high CAGR for the next few years or even the next few decades. Yeah. And the thing is that
drive that home. I mean, what's the biggest stat that jumps out to you, right? Because like you talk about it, the first phase is training the models. Then you let them loose to go ingest new data and make decisions. That's going to be exponentially more compute that ends up happening. But like, how do you put that in context for people when you try and explain?
So let's just say that at first, Jensen Huang always said, CEO of NVIDIA always said that there was a $1 trillion opportunity, $1 to $2 trillion opportunity when it comes by 2030 for AI. And now that figure, I think it was about $5 trillion as of his last podcast that he had in the BG2 podcast with Brad Gerstner. And when you think about that at scale, in just a matter of a year and a half, that number has ballooned about 150% on top of the existing 2 trillion.
Yeah, that's a good point.
What people need to really understand, and I think there's a lot of misconception when it comes to the actual build out of AI, but also the amount of inference that's going to be utilizing these models as the models itself do scale out. You already saw that AWS, Google cloud platform, as well as Azure, we're basically growing anywhere from 20 to 30 to even 40% for Azure. Yep. But as this continues to be built out to meet that demand, these hyperscalers can't keep up with the demand by building out their data center and infrastructure as they do on their own. They need to turn to smaller players to be able to help them do this. And not just smaller players that could build 1 or 2 data centers, but smaller players that can own the entire stack and build it at scale while being able to produce the outcomes that they have for the AI workloads that they're getting on their own. So if we take, for example, the recent deal that Microsoft had with Nebius, which was really one of the stocks that I found to be a really good buying point, especially when it was in its 20s, like just a few months ago. I think a lot of the misconception with that was that, okay, they're a Russian company because they used to be known as Yandex, but then they sold their Russian assets to be listed on the NASDAQ, and now they're headquartered in the Netherlands. And they have customers all over the world, with most of their infrastructure centering around the US, and that's where most of their customers are. But this entire team, not only is it a diversified business across 5 different companies, but their core business, they have a lot of experience from building data centers, from acquiring the land, to building all the buildings themselves, to getting all the servers, to have the entire stack from bottom up and top down, to be able to build a software on top of that entire layer, and then rent out this compute to companies that do actually need it. So much that Microsoft signed a $17.4 billion with them to build out multiple data centers in capacity for them for the next few years.
Yeah. And I think you put your finger on it earlier in your explanation that I think people need to understand that there was a false assumption that the Microsofts and the Googles and the Amazons of the world could just keep building out their data centers in perpetuity, that, hey, let's just keep doing it. They needed to go even faster. And the only way to go faster and bigger was to go find other players that could do it with them, that already had put the infrastructure and had the experience. And they basically had the guaranteed power that they could essentially, for lack of a better term, flip the switch and accelerate that growth much faster. Would you agree with that?
Yeah, exactly. And you even saw the news previously with Google signing contracts with TeraWulf, which is essentially another Bitcoin miner that has turned into advanced computing. And then you saw just last week that they signed up with CIFR Mining as well to do the same deal, and that one caught a bid. So the reason why IREN pretty much excites me in this way is because, one, it was trading at a pretty attractive valuation just a couple months ago.
What was your entry,
Obviously,
if you don't mind sharing? Where'd you
I
get
got
in?
it at $21, and I thought I was late. Apparently,
Dude,
I
was same
wasn't.
spot. I was like 20 some 19s, and I was like, this could go back to 10, and I'm not going to be surprised.
You know what? I was ready for it to go back to $10, and I was secretly hoping that it would. And I'm not going to lie, I'm still secretly kind of hoping it will.
No, don't say that. We had Mike Alfred on, who's on the board, and he's saying 100, 200, 300 is in the realm of possibility.
That would be very nice. And they never had a major deal signed up with them yet. So the market's still waiting to hear that, you already had Applied Digital and Core Scientific, which were both also Bitcoin miners, signed big deals with major contractors. So it's only inevitable that IREN is going to get one themselves. And the reason why I like IREN as a play in this aspect is because IREN, they're a very big fan of using green renewable energy, because it helps them basically keep the costs down. And they're actually spec'd out to grow their data center capacity all the way from 2.9 gigawatts from what they are today at 880 megawatts. So that's a 250% increase. And to have that 1 year from now is pretty wild to think about. They're doing it for someone. They definitely are.
Well, no, right. They know that the business is going to be there. And that's the funny thing is you start layering on even the most conservative models. And here we're bringing up the chart for IREN that they could be doing literally hundreds of millions of dollars in annual recurring revenue based upon the power that they have guaranteed to bring online in the next year and a half, which I don't think people understand. So I think to your point, we had Mike Alfred, who was on the board on 2 weeks ago, and he was saying it was still early, like, don't even think about it, hold forever, there's a long way to go. So you and I were cautious at 19 and 20. Here we are at 45. People shouldn't be cautious, not saying, recklessly abandon all discipline and just put it all in here, but it's still an attractive entry if this is a stock that could go to 200, 300 from here. Would you agree?
Yeah, it really depends on your timeline, right? So if you're trying to catch the absolute bottom and you don't want your price to go lower for the next couple of weeks, it's kind of hard to say that, right? I would say that it would be a bit unrealistic to buy into the stock today and expect it not to go below $40, because we were literally around $40. We were below $40 just last Friday, and that was no news because of IREN. It was because you saw the dilution that happened with CIFR, and CIFR pulled back as well. And where are they today? They're back where they were at their highs.
Well, it's funny because, the CIFR, that convertible deal was actually a really good deal. They can avoid the dilution, that they actually put in a mechanism, which a lot of the companies don't do. So I thought that pullback was overdone. So I actually added on that as well. Are you adding to any other names in this space? Or do you look at some of the pure Bitcoin miners that are rumored to be getting into HPC, or are you kind of waiting for that to really step in?
You kind of hit the nail on it. Earlier, you mentioned CleanSpark, and that's something that I just got into today. And I'm kind of riding the momentum in this one. You saw a bit of a bounce with crypto and Bitcoin specifically off the sub 110K levels. Its 200-day moving average is actually around 104K, and Ethereum is actually around 3K. So those have bounced pretty considerably off those lows, but not exactly touching yet. And I do agree with Tammy, as she was just on here recently, is that we still do have a little bit of ways to go. And, even though they do get into advanced in hypercomputing, it doesn't mean that we're necessarily out of the woods, because a lot of that price that they have today, as far as Bitcoin goes, does kind of direct exactly the direction that these companies do go in on the short term, because they do have a large reliance of their business on mining crypto, and that means selling the Bitcoin that they do mine to be able to sustain their operating.
Yeah, but don't you think and I heard Mike Alfred talking about this on a space over the weekend, where having the ability to keep some of that Bitcoin mining as they scale into HPC is actually a benefit, because let's say there's a slowdown in demand for HPC, or there's grid constraints, that they can actually reallocate resources to generate revenue from the Bitcoin mining. So it's almost an anti-fragile business approach once it gets to maturity, which I think is attractive if they can make that jump into HPC. And I think that's what you're saying with CleanSpark, is they got to prove that they're actually got a customer for compute, not just they hope to have one.
Yeah, if you look at the price action, and ultimately, the market's going to be the ultimate voting machine. The market's always going to be right at the end of the day. If you look at the price action with CIFR as well as IREN, they have somewhat detached from the price of Bitcoin volatility that we have seen recently. You saw basically Bitcoin trade sideways essentially for the last few months and actually pull back from its recent highs recently. And then you saw CIFR and IREN basically 2 or 3 times from there. So they are becoming a bit detached. CleanSpark, I feel like, is going to be that next company that actually does that. They did announce that they're going to get into advanced computing. And if they do that, they could possibly detach. And like you're saying, if they keep the Bitcoin in the balance sheet, it might reduce the volatility and reduce the correlation between Bitcoin as well as the underlying, which in this case would be CleanSpark.
All right, so we both love IREN. We've both been getting into CleanSpark. That's one that's got some really big asymmetric return potential. Let's pivot a little bit here before we let you go and we wrap up the show. We were talking before you came on about cybersecurity, and I agree with you. This is an area of the market that few investors understand how criminally underinvested we've been in cybersecurity, and therefore it's a tremendous opportunity, especially as we have so much more data coming online. But you tell me what your fundamental thesis is on cybersecurity, and is there a name that you particularly like in the space?
Yeah, so I've been a really big fan of cybersecurity for a while, and I've owned several cybersecurity stocks. But one of my holdings that I've had for quite some time is CrowdStrike, and that is mostly planting itself at the endpoint security client management. So you're talking about your laptops, your phones, and so on, the actual endpoint devices that the users are actually on. And then you have Palo Alto, which is basically the cybersecurity giant that's out there today that has its hands across all areas, but specializes mostly on network security. So basically making sure that no threats are sitting around the network itself that will eventually expose itself to the vulnerabilities within the applications and within the endpoint devices themselves. And then finally, this is the one that a lot of people don't really understand, is Rubrik. Rubrik focuses more on data resilience and data security. And what does that mean exactly? It means that if you have systems and applications that need to be backed up within your infrastructure and your enterprise environment, it needs to be recovered very, very quickly. And we're not talking about hours, we're not talking about days, we're talking about minutes and seconds. It needs to be recovered quickly because these are thousands of users that are hitting a lot of these applications, and every single minute that it's down could mean hundreds of thousands or even millions of dollars over the course of a couple of days. So that is the importance behind Rubrik. But most importantly, Rubrik doesn't really have any glaring competitors in its field. I wouldn't say they have no competitors, but they have a very wide moat when it comes to its field because they are growing at around 50% on a subscription ARR basis. Last time they had their earnings, the stock got sold off. Why did it get sold off? Well, it's likely because the entire sector was running into those earnings, but maybe it just needed to have a little bit of a pullback just to reload again for another leg higher. Today, Rubrik is actually probably the most popular companies out there when it comes to data resilience and data backup, that I think Wall Street is starting to recognize that. A lot of the analysts are actually projecting their price targets north of $100, and right now it's trading around 83.
Yeah, no, listen, and for people that don't know, it's RBRK is the ticker. It's still trading at like a $16 billion market cap, which is not that big when you talk about the opportunity in cyber. I've always traditionally played cyber through the ETFs just because I thought it was hard to pick there's no silver bullet solution. But it sounds like you've got all the bases covered when you go from CrowdStrike on the endpoint to Palo Alto in the middle, and then data resiliency with Rubrik. So I appreciate it, man. I appreciate your insights. I encourage everyone to follow you on X because you give out nonstop intelligence and information on the names that you're followed and invested in. So I appreciate what you do, man, and look forward to having you back on the show again sometime soon.
Thanks a lot, Lou. Appreciate it.
All right, man. Talk soon, Sam. Well, folks, we're cruising into the last 10 minutes of the show, and I'll tell you what, that one stock chart of IREN, if Led Zeppelin's Stairway to Heaven could be a stock chart, that was it. It's still going a lot higher from here. But I appreciate Sam sharing that he shares similar sentiments in terms of IREN and the fundamentals, what they're doing uniquely, but then also giving us some insights into the fundamental case for cybersecurity and a stock that I honestly didn't know too much about, Rubrik. So it's one I'm going to do some work on and get back to you on next week. What I'm not going to wait to get back to you on is Mr. Dodd coming in for the Dodd block here to go through all things that we may have missed, messed up, or gotten right. How you doing, my friend?
Good, brother. I don't think we messed anything up today. This has been an exciting show. Tammy with the Fibonacci, all the, really the data.
It's just Italian. It's Italian. Everything good in life has lots of vowels and is Italian. That's all we have to know from this.
Is that the key? Everything's
right.
Italian?
Yeah, everything's Italian.
I was thinking.
We got sliding on the wall, man. That
dude, what's going on back
Italians.
there?
That's the problem, Luigi
Logos are falling off the wall.
We're causing problems. We're upsetting the market gods.
Birds. Like, what's going on here?
We got ourselves a little bit of a quagmire here. What do we do? Do we fix it? Do we not fix it? Look at telepathy. Oh no, there's a hand of fixing it. All right, well, this is the time of the show for people that don't realize we go through what we call our high five. 5 topics that we either need to update you on, we need to admit that we were wrong on, or sometimes we high five and take a quick victory lap. So, you ready for it?
I'm ready. Let's do it.
All right, let's get to it. All right, my friend, this is also the time of the show for our loyal listeners when I typically forget what the hell we're going to talk about. So I'm going to try my best not to forget again. This could be 2 weeks in a row that I get them all.
You're going to get them all. This is a layup for you. And, I'm going to help you along this time. So
that's all right, man. You're the best hype man I could have.
Yeah. So fourth quarter, I would dream that you were talking about my UCF Knights and how they came through this weekend against Kansas State and beat them in the fourth quarter, but that didn't happen. So I know it's not about football we're talking about.
It's not.
You know what? We're talking about that the fourth quarter is, typically the best quarter for stocks.
You're absolutely right. And people don't think that, right? Like you kind of cruise into the end of the year when the markets are up. It doesn't matter if the markets are up 20, 30, 40% through the third quarter. The fourth quarter is still a profitable quarter here, and not just some of the time, almost all the time. You look at the numbers 80% of the time. If you look at more recent fourth quarters from 1990 on, it's 90% of the time. Tacking on another 4 to 10% move for the market from here. So listen, Christmas came early with the gains that we've had this year, but there's still many presents to come based upon just the seasonality for Q4. So yeah, and if we're talking football for a second, I don't have to be crying about my Florida Gators this week because they had the week off, so they couldn't screw things up in the fourth quarter.
Wait till next week, though.
Yes.
We play a little team called Miami.
Yeah, we played them too, and we didn't win. And
no. You play a little team called Miami.
No, we did. I think we play Texas next. I can't remember. That's how good they are not. I don't even know what the schedule is.
You're not even following your own team.
I'm not even following that. So fourth quarter, great for stocks. Fourth quarter, not so great for the Florida Gators or the UCF Knights.
All right. So recession part 1. For all the sense of angst that the U.S. economy of late and the American consumer continues powering forward, and new data confirms that this trajectory is going to last until the end of next summer. What is the specific data that's, keeping this, going?
Listen to you, man, sounding like a regular economist. Look, it's consumer spending. You hear the headline often quoted that consumers account for 70% of the U.S. economy. Here, if you look, like everyone's been expecting the consumer to hold back, pull back, stop spending. We saw a little bit in December, that orange bar there, a contraction, and then in April around Liberation Day, because everyone was freaking out, like, what's going to get expensive? I need to hold on to some money just in case things get out of control with tariffs. And then ever since then, we've seen really solid consumer spending, which means the economy is in great shape, or at least good enough shape to keep us out of a recession. So yeah, forget any of the headlines. There was a headline last week about the recession probability is now down to 23%, according to Goldman Sachs, wonderful black box model that they have. Ignore. Just look at what consumers are doing. The recession's not anywhere in sight.
Well, I'm hoping that December spending is down because Christmas is coming and my wife is starting to shop really soon. So let's hope that goes down.
No, man, I've been to your home. There's plenty of gifts and stuff around. So maybe she could do some home decor.
Yeah, let's hope not. What recession part 2? So I know that the Atlanta Fed earlier in the year predicted economy collapse. What are they saying now? Are the spin doctors spinning or what's happening?
Spin Doctors. That's a great band too. Yeah, look at, remember there was talk about the Q1 GDP growth was going to be negative 1.8% based upon the Atlanta Fed. And now they're showing, look at the far right. It went from about 3.3% to 3.8% for Q3. So we've seen a real reversal, even with the data economic wonks saying this economy's in good shape. There's no recession in sight, which is good news because you balance that with all the headlines warning about AI stealing jobs and that the labor market's cooling and that's why the Fed's cutting. It starts to create some nervousness on the part of everyday Americans, and rightfully so, that the economy is not on solid footing, right? That the number of job openings is now below the number of people looking for work. Those only tell part of the story. So we're here to tell the full story so that you get a better understanding of, is it a good time to be investing in the market, or should we be getting more cautious? And I'm telling you from the economic standpoint, it's all systems go.
Love to hear it. All right, big AI economy. So I know that the narrative's been lately that AI capex, that's is the economy is relying on the AI capex and Mag 7 and all that. So I know it's helping out, but what's the true story?
Yeah, the true story is that some people want to say that it's all AI and it's eventually going to collapse because you can't really be spending all of this. But if you look at everything else that contributes to quarter-over-quarter growth in GDP, there's only been one quarter, that was the first quarter of 2025 of this year, where AI was the only thing that was contributing to the growth. So there you see everything else is below the x-axis, showing that it was detracting from GDP growth. But if you look at every other quarter since the first quarter of 2022, all facets of the economy have been contributing to growth. So that's, again, another health checkup, right? Showing that all the vitals are in the green territory. Everything's safe and healthy. Does it mean everything's great? Does it mean that consumers might not have a little bit too much credit card debt? No, it doesn't mean everything's perfect, but it means everything's good enough for this economy to keep chugging along.
All right, that's good news. Big AI energy. So you and Sam were just talking about this, with the companies you're talking about, CIFR and IREN. My inbox and my X feed is filled with headlines about, the energy and AI, with companies like Oracle, Meta, and Google, and now OpenAI is, talking about, 125xing their energy capacity over the next 8 years, So how do average investors benefit from this?
You got to buy IREN, you got to buy CIFR. I think IREN's the best managed. It has the most value creation potential because they're vertically integrated. But here's what you need to realize, that I think it's hard. When we can't see something, we can't really understand the impact. And we don't see what it takes to create more energy, right? We just are used to, as humans, flipping a light switch in a developed country like the United States and the power coming on. And just assuming that if it's 98 degrees out, we can run our AC and there's going to be enough power to supply that. It's very infrequent and rare that we get power outages and rolling blackouts. They do happen occasionally. But the reality is, if AI is going to do everything it's going to do, where the spending has been already allocated, we need a tremendous amount of additional energy, right? It can't just be created out of thin air. I mean, I think that's Newton's second law of thermodynamics. I can't remember. That was a long time ago for physics. But energy can be neither created nor destroyed, right? So you got to find a way that you create it through the power generation. And you can't build a power plant overnight, right? You can get anything delivered overnight via Amazon except electricity, and that's what's really needed here. So the big way to play this, I'm convinced this is the big profit potential of the next 2 to 3 years that every investor should have exposure to. So I don't care if it's 1% or 3%, or you get carried away like myself and I have 30 to 40% of my speculative portfolio in this theme. This is the driving theme. It's not about will AI deliver profits. It's about will AI have enough energy to even get a chance to do that. And everyone wants that opportunity, right? Do you think the Microsofts, the Amazons, the Alphabets of the world are going to stop before they get a chance to prove what AI can do? No. So they're going to go spend what they need to spend on the energy. So make your money on the picks and shovels. In this case, the power generators, the people that have the energy to power and run the data centers. We could be wildly wrong here, but I think that's a very low probability. Right now, we've been very right. This is a way to just generally transform your amount of wealth in a very short period of time. That's my prediction.
I know we're both invested in some of these names, but like from a CIFR to an IREN to an OpenAI, they're obviously different, price targets to get into. Like, is there one of them that you kind of look at and say this is the one that you would lean towards, or are they all
I don't like to
just,
cherry pick. I think if I had 1,000 or 100 or 10,000 or 100,000, I would spread it evenly across 4 to 5 names. Like, start making purchases and not just do it all in one day, but I'd buy some this week, buy some next week, buy some the following week. You're seeing volatility. IREN dropped all the way down from 47, 48 last week. In the beginning of the week down to 41, right? So you got to pull back, and it ran up to 45 or 6 today. So I think that's the practical advice. It's not personalized investment advice, but spread your bets, spread them evenly. Don't try and cherry pick. And then as these work out, you take profits. Once you double your money, you take half your position off, and you look for another new opportunity.
Sounds good, man.
All right, brother. Well, we've run out of time on another episode, but we've not run out of new investment ideas. Next week, we actually have the CFO, Patrick Fleury of TeraWolf, who is one of these players in this space. It's another stock that I own that we haven't talked about much, but we'll talk about it a lot more next week. So I encourage everyone to tune in next Monday, 5 p.m. Eastern. Thank you to the team here. Thank you to you, Dodd. And I think I nailed the word game before we sign off, by the way.
Oh, of course. We got to finish that. Lose clues. How did we do?
We got them all. Lose clues. For those that don't know, Dodd gives me 5 words that have pretty much nothing to do with finance.
No. Correct yourself. I didn't give you words. This week, I had some emails.
Oh.
I got some emails to Dodd@thebigskinny.com. And Frank P. from Chicago, Illinois, actually suggested some words that I selected. So,
well, there we go.
If you'd like to be a part of the show and suggest in the future, send them to me. DODD@thebigskinny.com, and we are signing off. Join us next week or follow us on our socials at X, Lou Basenese, or The Big Skinny Live on YouTube. Until then, we'll see you.